You got an LLC, you're trying to figure out how to file your taxes as an LLC, a limited liability company, right? Come on and join the lab with Dr. Blackwell. Let's go. Welcome to the lab with Dr. Blackwell. We're going to talk about how to file business taxes for LLC, right? So here's what we're going to do, right? We're going to specifically talk about the LLC. As an LLC, right, remember one of the rules to an LLC is, as the owner, I cannot be on payroll. I can hire employees and put them on payroll, but as the owner of the LLC, single member, I cannot be on payroll, right? So what does that mean? You take your pay by, you can do draws, but it's not really officially called that unless we're in a partnership, right? But your profits, right? So if you're gonna pay yourself, here's how you should do it. You're gonna take whatever you feel that you want and transfer it from your business account to your personal account, right? Why is that important? Because when I file taxes, I need to know if I took money out for personal reasons for me personally as an owner. Why? Because that needs to be left as profit of the LLC to pay the taxes on it, right? So that's how we need to know all that. All these rules apply to that, right? So if my business made $100,000, right, but I know that I paid myself $2,000 a month. I transferred it $2,000 a month for the whole year. Well, 2,000 by 12 is what? $24,000. So at a minimum, my profits out of my $100,000 minus my expenses, my profit should be $24,000 at least, because I know that's what I paid myself, okay? And then I'm gonna pay the 15.3% self-employment tax on that $24,000, and that money is going to be added to my overall income. So if I got income from other sources, W-2s, whatever, that's what's going to be my income. But for LLC, remember, it's attached to your personal taxes. They're not separate taxes. They're attached to your personal taxes, right? And so you need all that stuff to calculate all the different changes that's going to come with it, right? So one of the things that's new is the qualified business income deductions, right? You're going to automatically get 20% on the qualified business income deductions that they're going to take, right, off your income, right? So off your profits to help reduce that tax bill. That's what it's going to do, right? If I'm a real estate investor, one of the best places to put my actual real estate property that I'm renting out, that I have long-term rentals on, is in the LLC. Why? Because that's going to be where we're going to maximize the depreciation, and make sure you go after the bonus depreciation. We'll get into detail in another episode, right? But if I'm going to depreciate, I want to do it in my LLC. Why? It's going to offset my it's going to offset my income to where I can pay no taxes. This is how I can make a lot of money and pay little to no tax, right? So especially if I'm a high income earner, if I'm a doctor, if I'm a lawyer, right? If I'm these things that puts me in a high tax bracket, but I have a real estate investment portfolio, right? I'm gonna wanna put that in my Schedule C so it can offset my income, so I can offset the taxes, right? So we're gonna go into detail about all that stuff in another episode. But for LLC, how do you pay your taxes? You're gonna use a Schedule C, attach it to your 1040, and you're gonna make sure you annotate your income properly, your expenses properly, even the expense of you taking personal money out, right? So we wanna make sure our business account is separate from our personal account as much as possible, right? And then the profits is gonna be at least what we paid ourselves, right? If not more, if the business didn't have more than enough business expenses, right? Or home office deductions or depreciation, all right? So that's how you pay yourself as an LLC, all right? Stick with Dr. Blackwell in the lab for more episodes coming. Peace.